Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and the regulatory landscape. I'm your host, Joe Malandrino, and joining me on the desk at the Nasdaq market site is Michael Romer, co-managing partner at Romer DeBass, Kayla Lee, licensed associate real estate broker at Serhant, Thibaut DeSaint, he's the founder and chairman of Barnes, and Alexander Zakarin, licensed real estate salesperson at Nest Seekers International. We're here to discuss the impact of easing monetary policy on the global housing market and international interest in the U.S. real estate market, as well as other regions around the world. It is great to have all of you with us. Welcome to Trade Talks. And Michael, of course, welcome back to you. And since we have spoken last, we got that 50 basis point rate cut in the U.S. We're starting to see global monetary policy ease. How is that impacting the real estate market?
Joe, we've been waiting for this for so long. For a year and a half, 2 years, we've been waiting for the Fed to reduce interest rates, and thank God that time came, because it resulted in immediate optimism, especially in the commercial real estate market. Yeah, as we know, the residential real estate market isn't directly tied or related to reductions of the Fed rate. However, the commercial real estate market is, but what it does from a global policy, it actually creates this optimism that people now want to invest, and we've seen over the last month an immediate impact where business has actually picked up, I would say, at least 20–30%. Phones are ringing more. I'm really excited about it. It's been long overdue, and I'm hoping for more additional cuts.
And Kayla, you specialize in luxury new development in Long Island, Manhattan, and other areas around the city. What are you seeing in terms of that particular segment of the market? Are they impacted by rate cuts as much as traditional residential markets?
Definitely. We have always had a lot of buyers who are just waiting for that other shoe to drop. So we have a lot of traffic going on, but a lot of people were just saying, hey, the rates are too high. For units that are above 4 million, like 4 to 10, we have a lot of cash buyers who are less sensitive to the rate cuts. But for unit buyers, prospects who are under 3 million, that does make a lot of difference in their mortgage payments. So we have now seen a nice uptick in traffic, in offers, and a lot of activity going on in the fall.
Yeah, and Thibaut, from the luxury real estate market and the performance worldwide, how is that comparing to the New York luxury market?
Yeah, it's interesting to see that despite the crisis, the interest rate, and all the activity, which is difficult now for the last 5–6 years, luxury real estate is doing very well. It's always a safe haven. And then depending, we are located in 20 countries, 90 locations. So we can see that it depends where we are, but there are always good locations and difficult locations. So we could see that we are doing every year a study which is called the Barnes Global Handbook about the behaviors of the ultra net worth individuals. And we have the top 50 city, we call it Barnes City Index, so it's the top 50 cities in the world, based for the international clientele, based on your financial, the beauty, the culture, and the practical aspect. And all based on those three criteria. Last year, so the beginning of the year, Dubai was number 1, Madrid was number 2, New York was number 3, and Miami, of course, and then we have Paris number 5. But this year, the study looks like New York won't be in the top 5. You will have Madrid, Miami, Dubai, Monaco, which is very interesting because no debt, and Milan.
Yeah, so it's interesting, Alexander, because not only is this just about real estate, there is a social component as well. It's more of a lifestyle in today's modern real estate market, particularly on the luxury end.
Definitely, it's a lifestyle. People come in here, they buy in apartments, but they also want to spend more time. Like as a real estate agent in New York, I'm very excited about this. It's probably the best time since the pandemic. And also because I do new development sales, but also resales, I can see how people start to more willingly resell their apartments. We didn't have this in the past couple of years, maybe even more. We also need to remember that about 84–85% of homeowners here in the US, they used to have a mortgage rate under 6%. So it's a good point that, like Michael mentioned, the rate cuts right after September, basically, people are jumping on the market. We're probably going to see more inventory a lot of people are going to be coming.
And that was my question, 50 basis points. I mean, how much does that really move the needle when supply is so low? I mean,
Yeah.
it's really the supply that is the biggest part of the equation, right?
True, supply is still a little bit tight. We think that it's going to be opening up, November, October this month, the end of this year. We also see that just based on September, we had about 24-25% more market activity here in New York compared to the previous September 2023. So it's definitely more, robust demand and supply and activity.
Michael, when you gauge that activity, is it more around that $1 to $4 million price point that is the benchmark for it, or could it, to Kayla's point earlier, the ones that are $4 million plus, is that the market that you're looking to benchmark against?
It's two completely different markets.
Right.
I'll tell you, this year we saw more deals in the high-end, ultra high-end luxury space, deals north of 75 million than ever before. And the crazy thing was most of these deals were cash. Right, so we're in the middle of a transition period where we're trying to see where the landing spot is. Your buyer who's purchasing a $1 to $4 million unit is very different than the buyer obviously buying a $70 to $80 million unit. However, it's all relative, right? What we're seeing now is a bit of a transition where we're seeing people being more willing to take out a mortgage because the rates went up too fast, too soon, in my opinion. My mortgage on my house at home is 2.95%.
Yeah, you and I moved at the same
right?
time. So
you remember
we're at the
this?
bottom,
And then
yeah.
it jumped up to over 7%, right? So now all of a sudden it created this problem,
Change everything.
right? So now that the rates have come down, we're starting to see more people borrow. But right now the real problem is, as you hit it on the head, it's a supply problem. And inventory is light. We are expecting it to open up. However, people are having a hard time affording their replacement properties, meaning where can they go, right, Kayla?
Right.
Yeah.
Right.
So when you are 75 million plus and they're coming in with cash, which must be a nice problem to have, are those international buyers for the most part?
There are a lot of big ticket that are coming from overseas. We do have a lot of Asian buyers coming back to the U.S. and they're all cash, and they're parking their money in New York. New York is a fascinating place for them, especially Manhattan, and they're coming in. There was a little bit of a stall during the pandemic, but I think it's just continuing to grow again.
Are you surprised to see that, considering we have an election coming up and there is some uncertainty in terms of what policy is going to look like, that you're seeing this influx of international money coming in?
Yeah, well, uncertainty is never good for real estate, so that's why where there is election, there is a little wait and see. But what you said is interesting because for foreigners, we can see that, for example, in some cities like Miami, we used to sell 60 to 70% of our sales to foreigners before COVID, and now it's less than 25% to foreigners. So it became like a real local market compared to what it was before. And then you have cities like we can call expat cities, such as Dubai, where 95% of the people who purchase in Dubai are foreigners, and they come for 3 weeks, 3 months, 3 years. And that's typically what we can call cities of the future, cities that welcome people from all over the world. And there are now European cities that are becoming like that, which are Madrid, Milan, Rome, which are now seems to be really booming compared to Paris and London that have been decreasing a little since 2-3 years.
Does that displace the local market?
Yeah, well, that's changed the local market because the foreigners buyers are always the one who lead and give the market the direction. So usually the local buyers, they just follow the market, and foreigners arrive like when the Miami market changed. Suddenly you had all these New Yorkers, people from California, from Boston, who came to live in Miami, and they changed everything because of course they realized the price were much less expensive than in Miami. So then they lead the market to to the top. Yeah.
Yeah, they do. Alexander, how are you integrating? I know you use social media a lot in real estate. In fact, on TikTok, you're the most followed real estate professional in New York.
Maybe one of the most.
One of the most.
That's a good disclaimer.
How is technology? Let's even bring AI into the conversation because AI is touching everything these days. How is that evolving the business, right? And then also being able to maintain those personal relationships and networks that you've built.
Yeah, it changed a lot in the past 4 to 5 years from just a bunch of school kids, scrolling your TikTok on Instagram. We went to actually selling directly to TikTok followers based on DMs, like personal messages that they send. So it's just a different cycle and approach. Back during the pandemic, people would just reach out and say, I like this apartment, can you show me a couple of more? I don't have time and it's not safe to look at tons of properties. And now it becomes like norm. People save their time by just like filtering out what they want. And also I feel like a lot of people from abroad, they wouldn't know about real estate, for instance, in New York or particular listings that you sell because they don't know what Zillow is, right? But everybody knows what Instagram is.
Yeah.
It's global. So all those platforms definitely gonna change. AI right now, I think mostly being used for property description. We don't go much further than that, but little by little, it's probably gonna change the game as well.
Are you seeing that, Serhant, as well?
Yes, and as AI gets more integrated into the purchase and sale of real estate, I think the brokerage market has to start focusing on service just to differentiate yourself from another agent. Everyone is starting to use these programs, AI, social media, so it's going to come down to sort of like personal service, knowledge of the market to get your client and take care of them.
Yeah, I mean, if you even dig deeper into what's possible with AI and so forth, from the company level, all the data that you are collecting and being able to scrub that and make it structured and use these predictive technologies for sales or who you're approaching.
Right.
I mean, that changes the game of real estate, doesn't it?
Yeah, exactly. Because we, as we work on long term with clients, sometimes 20, 30 years, we need to know them at best. So the CRM is something essential because especially because now they need experience, and we of course with Barnes we offer them not only the sales but also seasonal rental, the yachting, a lot of classic and racing car, the art. So you have to know them, to know exactly what they are looking for, to know where they like to go, and the CRM plus the AI can be a real plus, because then you have this listing of I don't know 200,000 clients, but you cannot work deeply with them without the AI. But with the AI, then you know that those clients play golf, those clients have other passions. So that's something which is very, very useful.
Yeah.
Jill, technology's it's crucial to the luxury real estate market, not only in New York City, but we recently opened up an office in the Hamptons earlier this year and have closed some large deals. We're talking about not only AI technology, but think about drones. Drone footage, video footage, aerial footage of these properties. Right. And that's what people want to see, because to Alex's point, the international investor wants to see that high quality picture, that high quality video. They want to feel like they're in the apartment, that they're in the actual mansion, whatever the case may be. Yeah. And AI is really filling in the gaps. Property descriptions, all the information that's available, because there's so much available to the investor out there. All they have to do is go online. But the one thing that AI cannot replace is the personal touch of both the real estate agent and the broker and the attorney. Thank you.
I was going to say, exactly. I mean, what AI or generative AI applications are doing for the legal business overall.
Of course, you'll
really
see.
Changes the calculus.
Go online and you'll see forms of contracts, and you'll get legal opinions by this computer. But that computer has not closed deals before, right? They haven't seen the complications that come up, and that's something that you can't replace experience. And over the course of years, how many deals we've closed, I mean, that's really what clients are paying for. Right. It's that experience, not only in the contract, the closing, but also all that due diligence work that goes into the transaction, just to make sure that our clients know exactly what they're buying.
Yeah.
We still have our jobs.
Yeah, exactly. Yes. No, talking about luxury real estate, I don't think that AI will replace us, because the relationship is essential. And our clients look for a strong relationship with the consultants, with the experts, and they really need this relationship.
Yeah, I mean, especially as you're developing the hospitality component over at Barnes, you're offering additional services such as yachting, private aviation. that really requires
Exactly.
in-depth personal knowledge of the client. That's pretty intimate. It's not like you just throw 10,000 names and then you pull out the ones that you think might be interested in yachting.
That's why we are developing in hospitality. We open Maison Barnes in New York because that's where we can meet with our clients, have some strong experience with them about all type of curated events in the lifestyle field. With luxury brands, with music event. We have the Stradivarius concert tonight. We have many different events where you better know your clients, share passion with them, and then you build trust, and then you can work with them for all their needs here or anywhere else.
Right, especially if you have them within that ecosystem. Kayla and also Alexander, if you can follow up on this, are you seeing that in the New York real estate market overall, where more bespoke concierge services are in demand?
Yeah, so in new development, we definitely start programming and helping developers come up with programming for their amenity spaces, but also services. So most buildings now, the concierge, the kids' room, the wine room, the library is just basic. Now there's usually services like, the dog washroom or the pet spa has the person in there washing your dog. They're booking, musical tickets and all that. Even in like the, more basic buildings, this used to be like a 5-star kind of building thing before, and now things are so much easier to do because even the concierge can now use an app to start helping all these owners living in the building. So we're seeing a lot of that.
Yeah.
Definitely. I mean, at Nest Seekers, we also do yachts and planes and jets and art as well. So everything requires personal touch and tailored service when you really know the person. That's why hopefully AI is gonna take our jobs ever. Yeah, and it's pretty much tailoring. And like you said, even event manager in the building, that's something that we keep seeing everywhere.
Yeah. So Michael, the New York City Real Estate Expo is going to be taking place. What topics do you expect to resonate there?
We're excited about this. On October 16th, the New York City Real Estate Expo will be hosted at the New York Midtown Hilton. It's a full-day event with over, I think we have over 20 different panels featuring 150 of New York's top real estate professionals. Last year we did the expo at Citi Field and had over 12,000 people in attendance.
Oh, wow.
And this year we're doing it at the Hilton, bringing it back to its original location, and we're extremely excited. Romer DeBas has been a sponsor of the expo since the beginning. Our online real estate education platform is the Real Estate Center for Success, is the school that actually accredits all of the panels, so any attending agents actually get credits for coming. And we're delighted to have panelists like Alex, I know who's joining us, Kayla's colleagues. Barnes plays a big role in the expo. So all of us are here getting ready for the expo, and we're really excited about it.
Yeah, I'm excited to follow up on that as well. We'll have Pierre on next week with some more insight. Question for you, Kayla. When you talk about new developments within the New York City area, where are they building?
So right now we have prime areas in Long Island City being built up, and a lot of people will say, is there still land left there? Because there's so many buildings and towers in existence. But there are about 500 units coming down the pipeline that my team is launching in the next 2-3 years. There's a ton of things going on in Greenpoint. I was a sales director at the Huron, built by Quadrum Global, and we've broken many, many price records there. The penthouse was sold for over $2,700 a foot in Greenpoint,
Wow.
Brooklyn.
Amazing.
So, and that was very close to $6 million, and it was surpassing Manhattan numbers. And this is an area that's, that has like lots and still industrial buildings throughout. So that was very exciting. But Brooklyn, Queens, Manhattan, I think we have a very healthy amount of new development coming in the next few years.
Where in Manhattan, though? I'm trying to visualize, Alex, where would you build in Manhattan? Is there any space left?
Basically, wherever you don't have a lot of space left, if you as a developer manage to get land lot and build, I think you're going to be golden. There are some developers like Monogram, for instance, which is not far from Grand Central, right? And then you don't have competition, and they're selling pretty fast. Greenpoint, like you just said, I mean, you guys probably sold 50% before even launching it.
Right, it just flew.
Yeah.
And then
Wow.
Hudson Yards is being built up ginormously. and even downtown Manhattan. It's like the financial district is having a little comeback.
It's super cool there again.
Yeah,
And
now it's cool to be downtown.
I mean, a lot of the younger kids, I sound old here, but they seem to gravitate down there.
It's becoming
as
hip.
well. It's
It
younger,
is.
like, it's like younger
Can I say
families.
that? But you know what? The world's changed. You talk about Greenpoint. I remember as a kid growing up in Staten Island, the idea of these multi-million-dollar developments in Greenpoint was a dream. But
Right.
that's the beauty of New York. And as you've pointed out, there's not a lot of land here, but the new developments in Manhattan are selling and selling quickly if priced right. And as we've talked about before, if the amenities are there.
Exactly.
With the right amenities and the right price, it'll sell.
And if you can make it here, you can make it anywhere, can't you? All right, appreciate everyone's insight. Thanks for joining us on Trade Talks. And thanks for joining me for MarketSite. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.